We have a lot to talk about here today. We had retail sales, we had bank earnings, we have initial jobless claims that came out, Michigan consumer sentiment surveys that came out that are affecting the markets here today. None of that was surprisingly too bad. Now, we're still going to talk about it, but AMC stock is at a very, very important level, and it's actually holding up very well today relative to what some other stocks are doing. But I want to point this level out. If you guys do not watch this channel too often, this is very important. The 50-day moving average. This has been some level of resistance over the past couple of days, and now we have retested it again today. Come down. It's sitting at $18.46 per share. AMC stock is at $18.16 per share. If we could see a break above that by the end of the day, if the situation really does start to turn around for the markets, that's going to be a very, very bullish thing heading into next week. And you're looking at that technical breakout. If we can't, as long as we stay right on that 50-day moving average, as long as we don't come down to say $17 per share to close the day, then I'm really expecting that break above this 50-day moving average by next week. But there's a lot of instability here in the marketplace today. We got to talk about exactly what is going on and why I'm actually kind of worried for the broad markets here and now. So hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for tuning in here today, wherever you guys are at. If you're in sunny, cold Michigan like me, or you're in sweet Cali, thank you guys for joining. Let's get this money. If you guys want to get access to all of my trades in real time, come join a trading group. Link down below in the pinned comment to do so for that. Now, nonetheless, what is actually going on today and what were the catalysts? So the catalysts were retail sales. You have month over month in that just retail sales, and then you have core retail sales. Core retail sales actually came in better than expected at 1.1% month over month. It was expected to come in at 1%. Retail sales came in month over month at 0.5%. It was expected to come in at 0.6%. So that is not such a great sign when you're looking ahead to see if the economy could go into a recession, because retail sales goes without saying, right? Those are the sales consumers are doing, buying things in the public. If that starts to go down, that's probably your leading indicator for a possible recession. And the markets are obviously not reacting very favorably to that, with the S&P down about 0.72% currently, and the NASDAQ down 1.56%. Also, the Russell 2000 is down 0.62%. But what do you notice about AMC stock? Yes, we are down 2%, but there's a lot of other stocks that are down a lot more than that today. And why exactly is that? Why are we down such a small amount relative to some other stocks? Well, it's because we have already fallen so much. We've fallen so much, and we did get good news, obviously, yesterday, where AMC Entertainment jumps higher as investors applaud new theater acquisitions. They had bought those 7 locations from a smaller movie theater chain, and now they have 10,500 screens. And this is from FX Street. They actually made this morning, so ironic timing on that one, because the stock obviously did turn around. But investors are looking at that as a positive thing. So that's likely why AMC is holding a little bit more strength here today on a very weak day for the stock market. We'll see exactly where things end, by the close of today. But that moving average is going to be very, very important. Now, as far as the bank earnings, not too much to actually say here. Some stocks, some bank stocks like Morgan Stanley as well as Citi were actually up at one point on the day. Stocks like Wells Fargo were down on the day. It really came down to who had the best trading revenue, which was very surprising. That's what investors picked out of the bank earnings. The consumer did show signs of demand slowing down, and it's called demand destruction. When interest rates become too expensive to go out and get loans, continue to finance debt, then that debt starts to slow down, and that's really demand destruction. That's what the Fed wants. That's what the Fed is getting. So it's really a mixed bag as far as the bank earnings, but nothing too crazy there. Michigan consumer sentiment did come out at 10 in the morning today. You actually did see the markets pop a little bit because of that. And overall, the Michigan consumer sentiment survey was a bullish thing. It showed consumers are still spending money, but the retail sales data today really showed the opposite. It showed a contraction. It was worse than expected, and that's what really has me worried for some of these large tech stocks once earnings do come. Something like Apple, in my personal opinion, a lot of their demand has been pulled forward, right? Everybody got flooded with a lot of free money. People were forced to stay at home. So people went out and got that iPod, that new iPhone, that iPad, right? The MacBook, the AirPods. They went out and got those things over the past 2 years. And that's why stocks, like Apple specifically, had really good earnings over the past 2 years and have been able to grow so much, becoming into a $3 trillion company at one point, larger than most countries, right? Larger than 99% of other countries. It was really good over the last 2 years. And now I think you're going to have severe slowdowns as far as the demand for products like these Apple products, and Apple alone controls 7% of the S&P. It controls like 10% of the NASDAQ. It controls a large portion of the market. So if Apple, if Microsoft, some of these other large cap stocks do start to get destroyed coming on earnings next week and then the week after that, you're going to see a lot of pain in the markets in a very short amount of time. So that's why I'm kind of worried for the markets, but that's exactly what you want to hear if you're an investor in the MOAS in AMC. You want to see stocks going down. You want to see interest rates going up. It makes it harder for shorts to remain in their short positions because financing those short positions becomes more expensive. And when even a small catalyst comes out for AMC, you're going to see, the stock actually rally off of that because not as many people, hedge funds, are going to be able to remain in those short positions. Hopefully that in a nutshell makes some sense, you guys. I'm pretty damn bearish on a lot of these banks coming on earnings, and I think that's going to mean some real troubling things for the markets, and we are actually hitting a low on the S&P 500 right now. And as you guys can see on AMC, we're actually bouncing a little bit. So you're definitely not seeing this sell-off continuing as fast for AMC relative to the broad markets. They've been pretty much just going straight down. AMC just started to get that, couple candles down, but relatively speaking, it's holding up a lot better, and that's honestly pretty surprising to see. You wouldn't think that would be the case, but I do think it shows a lot of strength for AMC overall. Now let's dive into some of AMC's data, and then let's go over the technicals, because the technicals are very, very important. So if we're taking a look at the option activity for the day, we'll go ahead and refresh this page. Quick look at the charts while we are doing that, and everything's still really hanging out at the lows. The option sentiment for the day is 0% positive. You've only seen one option come through, and that was a May 20th $17 put for about $34,000. But you're looking at one order. It says totaling $108.76,000. Very slow day as far as options. Today is a very large option expiration day, so you're going to see a lot of money actually moving around, and that might be why you're seeing such a bad reaction to the downside in the markets right now. As far as the short interest of free float, that's sitting at 19.73% short interest of free float. 101.69 million shares that are sold short, cost bar max of 2.73%, and the utilization still at 100%, and the days cover sitting at 2.42. So all of this looking pretty damn good, looking pretty ripe for a short squeeze in my personal opinion. Now let's take a brief look at the technicals for AMC, and then we will go ahead and wrap up this video. So AMC down 2.46% right now. Like I said, you want to watch that 50-day moving average very closely to see if we can get a break above that by the end of the day, or how far we do break under that. If we break down to $16.50, $17 per share, not going to be looking so good for a possible break next week of that 50-day moving average. If we cannot break the 50-day moving average, then your next stop could be $15 per share. Right? That's really the lowest level, in my personal opinion, that I think we could possibly touch. I don't see us going back to 13. I don't see us going to 10, and I damn sure don't think there's a chance that we won't squeeze. I think there's a 100% chance that we will squeeze, and this is exactly what I've been saying for a very long time now. We need to see this in the markets. We need to see the stock come down. We need to see the markets coming down. We need to see liquidity start to dry up, and then that's what forces shorts to cover. There's a difference between margin calls and getting forcefully liquidated. Margin calls, they can happen because your margin level becomes obviously too low, right? You're too margined up. Positions are going against you. You are losing. You get a margin call. Now, the difference is when you get a margin call, you can put that money in your margin account, additional funds to stay in your losing positions and ride those positions out. That's what hedge funds did during the last rally in June. And that's why they weren't all forced to cover. Well, when you have to put more money in your margin accounts and your stock portfolios are down, it's a lot more expensive to get access to capital. It makes hedge funds think twice. And in a lot of cases, when you do see that rally, or most cases, I should say, you're not going to see hedge funds able to meet those margin requirements, and then they will be forcefully liquidated within 2 hours. Keep in mind, they have changed a lot of rules, so now it's 2 hours for those intraday margin calls to actually put money in those margin accounts or be liquidated on them. So this is exactly what I've been waiting for, exactly what I wanted to see. And I've seen some people actually making videos saying AMC is not going to squeeze, and that's absolutely false. This has been what we have been waiting for. So pretty interesting, all of that. Hope you guys found value out of that little rant right there. This is what you want to happen. You want to see retail FOMO activity low, and you want to buy when it's low, and then you want to be a net seller when it does go higher, when the short squeeze actually does start. Now, as far as the MACD, that is bearish, pretty damn bearish right now. Typically, when the MACD on AMC stock does go this bearish, you want to be a buyer. Especially right now when the multiples have already compressed and we have been in this range between 15 and 21 for so long. I definitely want to be a net buyer right now of AMC stock. The RSI is sitting at 44.68 on definitely the oversold side. So pretty interesting. I think overall today is a bullish day, just showing how much that we are actually holding up, or how well that we are actually holding up. Some other stocks are down 5-10% today. So to see AMC down 2.69% at the time of this recording is not that bad, and people need to give it a break on the hawkishness around AMC. The time to potentially be hawkish was at $35 per share, right when the trading halt happened. That's your time. That was your moment to buy puts or do what you wanted to do in that case. And if you didn't do that, now is not the time to be hawkish on AMC stock, in my personal opinion. The downside has already came and it is already went. We're just waiting for that confirmed technical breakout for that cross above the 50-day moving average, then to make our way to 21, break the 100-day moving average at about $22 per share. So it's looking pretty damn good. Let me know your thoughts down below in the comment section. Make sure to like the video, subscribe to the channel on your way out, as well as get your free stocks down below in the description with Webull, Moomoo, and Public. And if you guys want to come trade with us live in real time, link in the pinned comment for that one, as well as the link to follow me on Twitter, also in the pinned comment. Thank you for watching, and I will see you in the next one.